Good afternoon, everybody. Today we're going to be doing a stock overview on Hims and Hers. For those who don't know what Hims and Hers is, they offer health care solutions to customers in a personalized fashion. Now, before getting into this overview, I just want to start off this video by saying none of this is going to be financial advice. This is purely just educational about the company, looking at its valuation, and at the end of it all, I'll talk about whether I'm buying, holding, or selling this company. So with that being said, let's get right into it. So what Hims and Hers does, they're a healthcare company focused on personalization and affordability. Here you can see all their offerings to their customers and what's to come. So we got testosterone and menopause coming here in 2025, and they offer weight loss, mental health, dermatology, and sexual health solutions. Now, there is a narrative around this company about it being a GLP-1 company in which it traded off a lot of GLP-1 news for a while because of it. And with the latest partnership with Novo Nordisk, it kind of became more clear to people that, hold on, yeah, maybe it's viewed as still heavily in the weight loss sector, but maybe it's not rivaling Novo Nordisk and Eli Lilly like that people once thought. They once thought that, maybe a lawsuit was to be coming for them after the FDA shortage ended, but then that got followed up with a Novo Nordisk partnership in which those fears kind of went away. And now people are like, okay, maybe that isn't as big of a threat to their weight loss segment as we thought. And going on top of that, the market may not be realizing this right now, but it will be realized in the future that, weight loss is just one section of this company. And testosterone and menopause, it's becoming a talking point, but it's not really priced into the stock right now. But that is going to be a major, major growth sector for Hims and Hers. Maybe not quite seen in 2025, but in 2026, 2027, in years to come. So, going on to the next slide, I want to talk a little bit about Tribe Labs. So Tribe Labs is a at-home blood testing kit that helps Hims and Hers understand the consumer's hormone levels, cardiac risk factors, stress markers, cholesterol levels, liver and thyroid function, and prostate health. This helps Hims and Hers personalize solutions for their consumers. They can also put all this data that they collect into MedMatch, which is an AI-driven tool that helps personalize care for the consumers. And the personalization of Hims and Hers is kind of what makes the platform so sticky for them. When they can, make a solution that makes something like, let's say, a 3-in-1 pill. You got hair loss, erectile dysfunction, and something to help you sleep at night. When you can put that all in one pill rather than that person having to take 3 pills, one, it's easier on the person. It's less things that person is going to have to go out and buy. And when nobody else offers that, their only solution is go to Hims and Hers. And when they are offering affordable pricing, why would you ever switch? So that is one of the reasons the retention rate we see is like 85%, and it's for good reason. So Tribe Labs is an acquisition. I want to say they acquired early in 2025, and is going to be a big part in the company's personalization, and as well as helping MedMatch continue to use data to understand the consumer and create better solutions for the consumer. So we have Hims and Hers personalization scale right here. So you can see that 1.4 million are currently on personalized solutions. That is up 136% year over year. This is about 58% of users on personalized solutions, meaning just 42% are not. So that is a very good number, and it's nice to see that this trend is continuing to grow, that more people are hopping on this, and you're keeping that high retention rate. And we love a high retention rate on a subscriber-based platform. It makes revenue very, very predictable, and that's why when people are expecting a decline in revenue this next quarter, I'm on the other side of it saying I do not believe that guidance is accurate, and I believe it's because this company loves beating quarter after quarter after quarter. They gave you a base level for revenues in which they will beat, just like they did This quarter, I want to say they beat by like 70 million. They will beat again by at least 50 million, making sure that they do not decline in revenue. And even if they do, they will still be growing at a crazy pace year over year. But that's not something I'm worried about till I see the numbers because, like I said, I think the numbers that they gave were BS. But we're going to move on. You guys understand the basis of this slide. So here is a look at Hims and Hers market share. As you can see, maybe you were wondering, maybe the whole market's growing. That's why they're growing so rapidly. Maybe it's not just a Hims and Hers thing. Well, as you can see here, share of observed total customers and shares of observed total sales, you know, Hims and Hers is taking the whole pie. They got it at 47.5% and 47.3%. Well, a company maybe you see that isn't on here is Amazon. But this is where I think a lot of people get confused. People may say Amazon's going to take the market. Hims and Hers is screwed. Well, I believe Amazon cares more about the pharmaceutical space in a lens of you need this medication, you're dealing with this like whatever you are, and you just need a timely manner. Let me ship you this. Where Hims and Hers is coming from more of an aspect of we can personalize your testosterone and um, your GLP-1s and whatever towards you, and we can also provide other big pharma solutions on our platform. Where Amazon's looking just for quick send-outs, just to kind of complete their moat, while really they're going to care more about their spend on AI and robotics, as there's just way more revenue and money to make in those spaces than I think that they see in competing with Hims and Hers in the big pharma space, and it's not necessarily their specialty. Um, so I could see a world where Amazon is, maybe sending out. You go to your doctor and they say you need whatever medication for your virus, and you can get it sent out to you from Amazon. Or uh, maybe you just need Zyrtec. You get it sent out to you through Amazon. But Amazon's not going to be able to have your blood markers and be like, oh, this is the dosage, this is how much testosterone your body's missing. We're going to make sure that this pill or whatever it is dosed perfectly for you so that, it fixes all your deficiencies. Amazon's not going to go into that kind of depth, I personally believe, and they're also not going to go into the kind of depth of figuring out what you are deficient in so that you can get preventative health care. Stop anything from your health, um, you know, whatever you're deficient in, maybe that will later on cause an issue. Hims and Hers can find that out through your testing and make sure that they solve it before that becomes an issue. So I think that's another place where Hims and Hers is going to thrive, where Amazon's not going to doesn't care enough about the space to go that deep in. And maybe one day, if they notice how big the field is, they'll try, because they will have such a big market. But for now, I don't think that's their focus, and I think that's where Hims and Hers has a huge advantage, and where people are just like missing the ball on this company. So let's look at Hims and Hers financials. They recorded 586 million in revenue in Q1 2025. That is a 111% year over year increase. Q1 2025, they did 20 cents in EPS. That is a 400% year over year increase. They got 62% gross margins, which I believe the company came out and said should look more like 70% eventually. GLP-1s, from my understanding, is what has brought that down from what it used to be, which was like 80%. You got 9.88% operating margins, continues to increase, but stays low because the key goal right here, right now, is expansion, and that is part the reason for the lower operating margins. They have 82 PE and a 7.11 price to sales, which is not bad. You might look at the PE and be like, that's kind of high, but also not bad for the kind of growth that they're bringing in. Or maybe you're thinking it's kind of low. Well, I will say, because I look at it from their growth rate, I view it as low. But what you do need to understand is Q3 of last year, they recorded 32 cents of EPS because of a tax break. So that makes their PE look a lot lower than it actually would be if they weren't to get that tax break. And, we're coming up on a time where that 32 cents is going to get replaced, and it'll probably be similar. So you'll probably by then be doing about, I would want to say, like 24 cents of EPS. So you lose like 8 cents on the ball there, and it just raises the PE a little bit. So on to the next slide, I want to actually look at the Hims and Hers chart outlook, which is kind of why I was just talking about that, because I knew it was going to lead into the chart, and I could kind of give you guys more of my price targets, and then you guys can make your decision on if you guys think it should be higher or lower or what. So what I personally think fair value should be is about 70 to 80. I feel like that's a good range. You put it at probably slightly above, I'd have to do the math, but slightly above 100 PE by the time that 32 cents comes off. And I think that's pretty fair for a company growing as quickly as it is. I think once you get to like 150 PE to 200, it's kind of high for a lot of these companies, even when they are fast growing. You mark in um, a lot of growth, and I just think there are a lot of other good growth companies that I can, talk myself into buying instead. But I'm not saying that those aren't still deals for these companies. But when I've been collecting, intentionally at $22, I just don't see a need to add at those prices. So that's kind of what I'm looking at. So I have like a fair value at about 70 to 80. And the interesting aspect of this is Hims and Hers actually has a 34% short interest. And on this huge run up, we actually suspected that this might be the short squeeze, but we recently got the report. As of May 15th, we hit record high short interest at 34%, meaning none of this was a short squeeze. And so now we kind of see a cup and handle creating, and we could be getting ready to break 100. And I believe when the short squeeze eventually does happen, we will pass 100, and I'm fully prepared for it, in which I think it squeezes up, and then once the squeeze kind of ends, we settle around probably 80-ish dollars would be my bet. But what I'm kind of doing with this company right now is, so right here on this Tuesday, I sold 27 of my 327 shares at 61, like 20 or 40. And I was under the impression, because I've noticed the RSI was high, it was crossing that yellow line, and I was like, this might take a breather all the way back down, and it could meet these moving average lines at $45 is what I was thinking about. And now we see a cup and handle, but I don't want to chase a short squeeze. I'm very happy if my 300 shares are part of it, and I'll look to move the profit that I made onto something else. I already made the 3x in a year. I'm happy. I can move on with that money. But in a case where maybe a short squeeze doesn't happen, let's say more macro bad news comes out, this thing definitely could hit 45, and then that's when I would look to, redeploy that capital back in. That's kind of like my buy spot is like 45, or maybe it hits one of those top lines, maybe a little bit lower, or maybe a little bit higher, and then that's when I look to deploy that capital. So that's kind of where my head's at. So I'm currently at a hold with this company, but I'm very bullish on the company. I could very well see this thing shoot higher. A lot of retail investors are very curious and bullish on this company, so it's definitely a good name. But I do just want to remind people, make a decision for yourself, as this video is not financial advice. I'm just personally telling you guys what I'm looking at for myself, and you guys can make an educated decision on your own behalf. So that's what I see here. Now, on the next thing, I do just want to say, if you guys want to see my takes live, because I'm not always going to be on YouTube, go ahead and follow my Twitter. I post constantly, and it's at investinc_intel, but the name on it does say fundamental investing. It just wouldn't let me use that as my handle. It said it was too long. So my handle is investinc_intel, but the name on the account says fundamental investing. As well as subscribe, comment, and like. If you guys maybe are bearish on the company, let me know. Maybe you guys don't think I'm bullish enough. Let me know. This might be a name that you guys have just been curious about, and you guys might still have questions. Leave your questions in the comments, and I'd be glad to answer. And that being said, I am looking at doing some morning live streams here in the future. I'm just going to wait till I grow a bigger subscriber base so that we have a great community here in the morning to discuss market movements, depending on when it happens, tweets from the president, but I hope it's within the next 4 years. So tweets that, Donald J. Trump might be putting out that's moving the markets, and all that exciting news. And being up for the CPI reports and GDP releases and Fed minutes and all of those great things that move the markets. So that's all things I'm looking to do here in the future. But if you guys enjoyed this video, like I said, make sure to hit the subscribe button, comment, and like, and I'll see you guys in the next video.